Welcome to the podcast, Julie.
Thank you very much. I'm glad to be here.
Okay, so let's kick it off by giving the listeners a little bit of background about yourself. Can you hit on some of the highlights of your career before Self?
Sure. So we actually moved home from the UK in July of 2023. And right before we left, I was running an online B2C pharmacy business that covered about 75% of the addressable European market.
Wow.
And pharmacy in Europe is very, very different than it is in the US. There's no Walgreens, there's no CVS, there's the corner pharmacist. And so being an online player was very interesting from just a consumer perspective and from a regulatory perspective, and really got some, I guess you call them regulatory chops working in that business, which come to Self, I think has been helpful for me here. Before that, and what brought me to Europe, to the UK, was I was working for Groupon, which was headquartered in Chicago, and they needed someone to run the international operations. And so I went over to London to run international for Groupon, which was about a $2 billion turnover business covering 15 different countries, and focused on growth and process standardization while I was there, and learned a ton about operating in non-US employment markets and all the fun that goes along with that. And it was a great, living in Europe was a great experience, for me from a career perspective, but for my family as well, just in terms of, the experiences that we got to have doing that. So I worked at Groupon in Chicago, which is where the headquarters were, led the local business there, drove our marketplace efforts, and really turned Groupon from a deal a day into a marketplace company. Prior to that, I worked at Orbitz, which is a travel company that Expedia has since acquired. And then prior was at a couple consulting firms, and kind of knew, I don't know how I knew this, so you can't ask me why, but from an early age, I kind of had this goal to be a CEO. And so that's
Okay.
through my career, kind of what I've been heading towards.
Right. Well, and now you are. So what was, firstly, maybe talk about when Self and how it got on your radar and what attracted you to the CEO role at this company.
Sure. So as mentioned, I came home from the UK, from London, in July of 2023. And it was really the first time in my life that I had an opportunity to take some time and look for a job. Prior, I'd kind of job campus recruiting, and took a job, and then another job would come along, and maybe I'd take Friday off and then start the new job on Monday. And it just sort of happened. And I'm pleased with every job I've ever had. But in this case, I really had time to look for a job, and I had to contemplatively go and look for a job. And so one of the first things I did was made a list of the things that I was looking for and things that were must-haves and must-nots, and got pretty serious about what those list of criteria were. And so I did so much networking in this time period. And one day I got a call from a headhunter, and they said, "Hey, we have this company called Self. Maybe you've heard of it." And I said, "Oh, I don't know." And it's a fintech and this, and this. And as I got to know the company, as I went through the interview process with the board and with James, the founder, things on my must-have list just started getting ticked. So great investors, money in the bank, proven product market fit, a clear path to profitability, a caring company. And the kind of the icing on the top of this whole thing was that this company was not only a company that cared about, profits and making returns for investors, but really truly at the heart, had a mission in trying to help humans. And it was like, okay, this is the job for me. And so it was, a fairly quick process for me to get through the, interview process. And I think we found our eyes met on this opportunity, and it was the perfect opportunity for me.
Right. Great. So, and I did interview James a few years ago, which I'll link to in the show notes for those who are interested. So then maybe let's sort of start with talking about, how do you describe Self today?
Yeah. So at its roots, Self is a company that helps consumers with low or no credit reestablish or establish for the first time their credit. And credit is, I think, as most of us listening to this podcast probably know, it's kind of an entree to life. And if you don't have credit, or if you have poor credit, you're just disadvantaged in life. And usually this is happening to people that don't need any more disadvantage in life. If you have a poor credit score, it's more difficult to get good insurance. It's more difficult to get a mortgage. You might not be able to, you might have to have a higher deposit for your apartment that you're trying to rent. It just goes on, and it's just this death spiral down. And so James founded this company to really help people improve their outcomes through the use of access and improvement of credit score.
Mhm. Okay, so then maybe talk a little bit more about who is sort of the core customer. Is it young people? Is it, immigrants, people trying to rebuild credit? What's the typical, maybe you could sort of tell us a little about some of the different cohorts you have.
Yeah, so most of our customers, or a lot of our customers, I won't say most, but a lot of our customers are in segments of the population that are just underrepresented in banks and in the banking system. And they, may have mistrust of the banking system because they've gone in before and tried to get a loan for something, or tried to open a bank account and we're told, sorry, you can't do that, or you have to pay us to open a bank account because you don't have enough money. So it's people who, are inherently potentially distrustful of the typical banking system that exists in this country. We do have a lot of people who have had a couple mistakes that have led them to have, negative credit scores that lead to some of the negative outcomes that I described previously. We have folks that are new to credit, so just have never had the opportunity to establish credit. The ironic thing about credit is you need credit to get credit. And so we kind of help both those scenarios, so both the repair and the reestablishment, or the establishment of credit. We have a lot of, women are in our population. Our target market, is over 100 million Americans and growing, because we've had some really difficult years here, especially for some of the populations in this country, just with inflation and interest rates rising. So we see that pool of people who need our help is actually growing, and we're not excited that it's growing, but we're excited that we have a product that we really think can help them get through tough times and improve their financial futures.
So can you just talk a little bit more about the credit builder product? You've got just explain high level how it works and what's involved in setting up a credit builder account.
Sure. So first of all, if anyone listening wants to set up a credit builder account, you can go to self.inc to do that. We take you through a process, and essentially, as a consumer, you provide us some information. And I think it's a 12-step process, and we take you through the screens, and it doesn't take incredibly a long amount of time. And you commit to paying money into a secured CD account every single month. And once you do that, we take the notice of that payment, and we tell the 3 credit bureaus that Peter has made a payment of X number of dollars, and it's gone into this account. And we report that on your behalf every single month to the 3 credit bureaus. And what this does is a couple things. One, you are establishing or reestablishing your credit because we're reporting that information to the credit bureaus. We report to 3 credit bureaus because, as a person who might want a loan or needs a credit check done in the future, say to do an apartment rental, you have no idea which credit bureau the person doing that on your behalf is going to use. So 3 is an important number for us, that we talk to all those 3. You're learning how to save over this time period. Many people have never had the opportunity or thought about saving. And so we're teaching a habit of saving. At month 3, if you've been successful in making those payments, we offer you access to a secured credit card, which for over 30% of our population does not have a credit card. This might be the first card they've ever received. And so that's a nice benefit of this product. And then at the end of the term of the credit builder account, you as the consumer get a lump payment of all that money that you've saved, minus the interest that we take out as our fees. And so it's a pretty exciting moment for consumers at the end. It's almost like, if you remember, Publishers Clearinghouse used to do these commercials on TV, and they'd come over to someone's house with a check. I think for some of our consumers, it's like that. They've actually saved the first time, and they get a check from us or an ACH disbursement at the end of the time that they've saved this money. They've likely improved their credit with the credit bureaus, and we hope that they've also developed a habit of knowing how to save.
Right, right. So then what happens then after that sort of 12-month period? I mean, obviously you said some have the secured credit card, which I imagine they keep using, but do you have like a graduation process for those people?
So we have recently started offering another way to build, rebuild, and establish credit, which is a rent and bills product. And so that works in a similar way to what I've described with the credit bureau. We look for your rent and bills payments within your bank accounts, just through a process that we have. And then we report those payments to the credit bureaus in a similar fashion as described. And so that can be for your rent, that can be for your utility bills, so like your gas and electric. And those are also positive numbers that we can provide to the credit bureaus. In terms of additional graduation products, that's something that we're working very hard to continue to establish. Our customers love working with us. You know, if you go and look in the App Store, we have really high customer ratings. We have great customer reviews. We have great customer testimonials. And so we know they want to continue working with us, and we're working hard internally to figure out what it is that makes sense for the customers that we've been able to graduate from the program.
Right. No, I did actually go onto the App Store, the Apple App Store, and saw you have over 250,000 reviews, 4.9 stars. That to me is pretty staggering, because it means you obviously almost everyone's giving you a 5-star rating. So and I'm sure you read some of those reviews. I'm sure you did before you took the job.
Yep.
What are your customers like most about Self?
I think what they like most is that they are able to see a positive movement in their credit score. And a lot of our customers come in, and if you ask them what their financial goals are, they'll say they want to own a house. But they know that in order to get a mortgage and to own a house, they need to have, an acceptable credit score. And so I think a lot of them get very excited that they're able to, improve credit and sort of learn how to save and learn how to think about credit in a way that maybe they didn't know how to do prior to working with us. And I think, there's a lot of mystery in credit scores.
Mhm.
Even for those in the industry, I'd say they probably would say there's a lot of mystery in it. And but I think we demystify some of that for our customers, which I think is incredibly helpful.
Right, right. So can you share some metrics? I mean, what is a typical, maybe you could even give a range of increase to customers' credit score? And I imagine it's going to be different if someone comes in and they've got a 500 credit score and someone comes in with a 640. I mean, but can you give us at least some information about this? How much do people's credit scores increase?
Yeah, so there's a lot. Like I'll start by saying there's a lot of stuff that goes into a credit score.
Right.
There's where you start, as you mentioned. There's we only control is not even the right word, but we only have insight into what people do on the Self platform. So, people can do things outside of the Self platform that could help or harm them, in addition to what we're doing. But for customers that are timely with their payments on our platform, we have seen like a credit score increase of around 49 points. And that's something, we look at this data a lot. It's very important data to us because we want to make sure that we're always, helping our customers move forward. Um, and I think the other thing that, like I mentioned before, like this building of habit of saving is an important part of our product as well, and an important thing that to me indicates that our customers are evolving and learning and really creating new habits. And new habits are hard. Like we knew that, if it's with exercise or eating or saving, it's a similar kind of thing that your mind has to go through. And saving's probably even harder than the other two because people run into mishaps when they just can't do the saving that they were planning on doing. So really that habit is pretty impressive to me. Our new product that I mentioned that we launched, which is a rent reporting product, we've just actually finished some studies with externally, and there over a 12-month period, we see about a 15. Sorry, I'm going to repeat myself. With the rent reporting product, we see about a 15-point increase in just 3 months. And again, it's all the caveats I said before. People might do things outside of our platform that makes that number different, either higher or lower. But we see pretty decent results from that as well.
Right. Okay. Okay. Excellent. Excellent. So then what about I'm interested in financial literacy, right? And it seems like you say people are getting used to this savings habit, seeing improvements in their financial lives, almost in real time. But are they learning? I mean, how do you approach financial literacy? Because it seems like a lot of your customers, this is the first sort of foray they've taken into trying to improve their financial lives.
Right. So we have many communication touch points with our customers. So signing up for the product, there's education that occurs within that sign up process. Obviously the habit here we're trying to build is this on-time monthly payment. And so we do a tremendous amount of work, and we're always iterating on what kind of messaging should we be giving our customers about the importance of making these payments in a timely manner. And so we send emails and different types of notifications to help remind that on-time payment is important. We have a series on YouTube we have a certified financial planner that works with us, and she has a series on YouTube that educates consumers about credit and how to think about credit and credit building and savings. And she's a lot of really interesting things that she does there and says there for us.
Mm-hmm, mm-hmm. Okay, so if you've been watching some of the fintech media, there's been some criticism of not your company specifically, but credit builder products in general. Some people argue that they're too expensive and they're not a reliable signal of credit behavior. How do you respond to that sort of criticism?
Yeah, I think it's interesting. I'm not going to talk, I won't name competitors, but I'll talk generally about competitors. I mean, I think as far as I can tell, I think James and Self were one of the first players in this
Yeah.
space.
Yep.
And so I think we created a category. And of course I work here, so I think that our product is the best on the market. What's happened is, our product has been so successful that we've had copycats. As you see with any successful product, you always have people that come in and try to copy. And I think some of those that have come in and copied have taken shortcuts to make the product seem easier to use for consumers. And I think that has, what you're talking about, some of the criticism that's been out there. I think some of that has to do with some of those copycat products that are out there, because you just look at them and as a consumer, they seem easy. But we don't believe the efficacy of those products is as strong as our efficacy would be. And I think it's some of those bad players that have, caused some of this problem that you're talking about. Again, I'm not going to name people here, but some Google searches could indicate some people who've had recent trouble just with the exact topic that you're talking about. So our goal is to always be, consumer first and doing the right thing by consumers, such that, even though our products might have a similar name to some of these that maybe aren't as good at helping with credit, that we're really doing right by the consumer. I think, for us, that's a super important, critical thing for us to do.
Right. Sure. Okay. So I want to talk about doing right by the consumer. I want to talk about your relationship with Spring 4. That I saw that news, I think it was just a few weeks ago. And full disclosure, I've known Rochelle, the CEO and founder there, for many years, and I'm officially an advisor to Spring 4 as of like 2 weeks ago. So I wanted to talk about, like, maybe you could explain a bit about what you're doing with Spring 4 and why you decided to bring them on.
Well, I have known Rochelle for a very long time, decades.
Okay.
And
Longer
she
than
was
me.
actually, she's the CEO of Spring 4, and she was actually instrumental in like helping me through this kind of job decision. So she was one of the first people that I talked to when I started talking to Self that was external. So
Okay.
I share your long-term, relationship with her. So we work with Spring 4. We send many of our customers to Spring 4 to help them with both financial literacy and to help them find additional ways to kind of navigate the financial landscape that they live in. So we know that our customers are having tough times. We recently did a survey, and something like 30% of our customers were planning to start a side hustle in the coming year, like because they need more money. 30% were already doing a side hustle.
Wow.
And a lot of the resources at Spring4, help people that are having financial difficulty kind of, get out of that situation. So they offer a lot of resources educationally. They offer, different savings programs that might be available to consumers that consumers don't even know exist. But if you're in a certain, income bracket or, socioeconomic class, can be helpful to you. And so we link a lot of customers there for education. I think we've passed over 3 million different customers to Spring4 since we started our relationship with them in 2019. So it's a great relationship. And like I said, at the core of what we do is really helping the consumer improve their financial future. And we feel that like Spring4 has a great, capacity to do that beyond the kinds of things that we can do here itself.
Right. And what can you, like, I think it'd be good to sort of talk about, when someone gets into trouble, right? They're trying to make these monthly payments, and they are, obviously there's going to be some people that lose their job, that get into some sort of difficulty, medical debt or whatever it is, and they just simply can't do it. How do you handle, I mean, obviously you can refer them to Spring4, but just internally, what do you do to help them?
Well, we try to help people with telling them, when they have to pay, if they don't have to pay. Our product is fully cancelable if people get into a situation where they can no longer make payments. And so we let people cancel, assuming they've already accrued funds into their secured CD account where we put the customer's money. We would get that back to them as quickly as possible so they can have access to those funds. And then, we keep in contact with our customers so that we can, talk to them in the future when they're in a better financial position. And I'd say one of the things we launched this free rent and bills reporting product in early December. And one of the reasons we did that was, the economic climate has been very difficult. Just a few pieces of data. In 2023, the average family had something like $390 through $400 extra per month in just inflation costs, just from groceries and gasoline and whatever, and like $100 extra in interest payments from their car or wherever they might have interest, credit cards, et cetera. And if you just $6,000 a year, that's not small, especially if you're already financially constrained. And so one of the reasons we launched our free rent and bills reporting product was because we knew people had need to, repair credit. But we also knew that maybe they couldn't pay into a credit builder account right now. And so we saw this as a way to get them on the Self ecosystem, to start helping the customers, and to move forward.
Right. Gotcha. Okay.
And just to be clear, that the free service we offer is free, is rent reporting, not rent and bills. So we have another product that's a bills product, but that's a for-fee product for our customers.
Right. Gotcha. Okay. So I know this sort of predates your tenure here, but if you're watching the NBA right now, you see the Self ads are on TV. You see your logo on, I believe it's a San Antonio Spurs jerseys there. So tell us a little bit about your marketing strategy, why you've decided to pick that particular sport and go all in.
Yeah, so that we sponsor the Spurs jersey. So anyone watching an NBA game that the Spurs are in will see Self on the jersey of the players, which is really cool and exciting. This is one very visible and exciting part of our marketing mix and our marketing strategy. I think one of the reasons that we chose basketball at first was it's a high affinity category for our customers, and so we do a lot of customer surveys. And we found that our customers have an affinity to basketball. And then number two, the Spurs organization is one that, I don't know, it just sort of mirrors the values of self. So they're an amazing organization. They're very values based, kind of in everything that they do. It's about the values and making sure that the human spirit is represented, and that they focus on underserved communities, and they do a lot of social goodness in the world and in San Antonio. And so it was just sort of a natural fit. I actually had the amazing opportunity this past weekend to go to the All-Star game of the NBA, which was in Indianapolis, as a guest of the Spurs, and had an opportunity to spend time with many of the executives there. And it's just like, we're just like-minded. And so it's a really nice fit for what Self is trying to do and what the Spurs are trying to do. So we're just sort of naturally together.
Right, right. And they've got a very exciting young player on their organization right now that's getting
Very
a lot
tall.
of. Yes. Very, very tall. Yes, indeed. Okay. So then now, like to sort of close with looking towards the future. What's sort of on your priority list? Where do you see Self going in the short to medium term?
Yeah, a couple things. So one, we know that there's 100 million Americans that need that can benefit from the products that we offer. And so we're doing and I think that's growing, both with the economy that we've just had for the past few years, and with the fact that college loan forgiveness is now over, and you've got people who are just going to be in the need to improve their credit. And so we're doing a lot of work on the core products, so the credit builder account and the secured credit card, to make them better. There's always things you can do to make things better. We're testing a lot with pricing to potentially make our products more accessible to more people. And we're doing a lot of work to just make those products as good as possible. And then we're doing a lot to find new access points and entry points for consumers who maybe don't want the credit builder account as their foray into Self. I mentioned already the rent product that we have. That's one, and we're looking for additional front doors, we call them, to really help our customers. And so our mission remains helping customers improve their financial futures. We feel that we have a good traction in this area already, and we're going to continue to build things that are great for our customers.
Okay, well, we'll have to leave it there, Julie. Best of luck to you. I mean, certainly it's important to serve this population. They need better products, and I think fintech companies like yours are providing, I think, something that just wasn't enough. None of this stuff was available a decade ago. So keep up the good work. Thank you very much for coming on the show, Julie.
Thanks.
Okay, see ya.